10 beach towns where rising seas are making homes unsellable. Imagine you spend 30 years working, saving, doing everything right, and then you finally buy your dream beach house, ocean views, salt air, the whole thing. You're basically living in a screensaver. And then the ocean starts moving in. Not in a dramatic Hollywood wave kind of way. No, this is worse. This is just water slowly showing up in your driveway on a Tuesday. For no reason. With no storm. Just a tide. Regular, boring, apocalyptically inconvenient tide. This is what they call sunny day flooding. And it is exactly as depressing as it sounds. No thunder. No dramatic news coverage. Just a guy wondering where his property value went. Today we are talking about 10 beach towns where the ocean is essentially trying to repossess the neighborhood. These are real places. Real people bought real homes there. And right now some of those homes are becoming very difficult to sell, very expensive to insure, or both simultaneously, which is genuinely the worst combination imaginable in real estate. This is not a doom video. This is not me telling you the world is ending. The world is not ending. Some coastlines are just getting renegotiated by geology, and that has financial consequences that I think more people should know about before signing a mortgage. Let's get into it. Here's the thing nobody in the beach town real estate brochure is going to tell you. Water is patient, like extraordinarily patient. It does not care about your incomes. It does not care about your renovations. It does not care that you put in quartz countertops. Water just does what water does, which is find the lowest point and hang out there indefinitely. Limited supply. Rich people want it. Classic economics. And that logic held for a long time because, well, the water mostly stayed where it was supposed to be. That relationship is getting complicated. Sea levels along parts of the U.S. coast are rising faster than the global average. Parts of the Gulf Coast and the Southeast are dealing with a double problem where the sea is going up and the land is going down at the same time. Subsidence, they call it. The ground literally sinking. So if you are standing in certain parts of Louisiana and asking why you have water in your yard, the answer is yes. Now here is where it gets financially interesting rather than just scientifically interesting. FEMA has been revising its flood insurance program. The new pricing model, called Risk Rating 2.0, is designed to actually reflect the real risk of where your house sits, which sounds reasonable. But if you are in a high-risk flood zone, your premium is not going to feel reasonable. It is going to feel like a second mortgage. Some homeowners have seen their annual flood insurance bills go from a few $1,000s to $10,000, $15,000, even $20,000 or more, depending on location, elevation, and how annoyed the actuaries are feeling that day. And here is the kicker. In many coastal markets, you literally cannot get a federally backed mortgage without flood insurance. So if insurance becomes unaffordable, buyers walk away. And if buyers walk away, you cannot sell your house. And if you cannot sell your house, you see where this goes. The other thing outsiders always get wrong about this is they picture some obviously crumbling, flooded disaster zone. But these are not ugly places. That is the whole problem. These are beautiful towns, charming downtowns, great restaurants, deeply desirable in every way except for the part where the risk profile is quietly shifting underneath them like the land itself, which in some cases it literally is. Let's count them down. Number 10. Tybee Island, Georgia. Tybee Island sounds like somewhere a Jimmy Buffett song goes to retire. It is a small barrier island off Savannah, very cute, very southern, very much surrounded by water on all sides in a way that should have been a red flag for more people than it apparently was. Barrier islands are exactly what they sound like. They are barriers between you and the open ocean. That is their whole geological job. The problem is they are also dynamic, which is the science word for they move around. Tybee has been losing land on the ocean side and experiencing increasing tidal flooding on the backside, which is a fun sandwich of vulnerability to be in. Flood insurance costs here are climbing. Some properties are mandatory flood zones, and the costs can run several thousand to well over $10,000 annually, depending on your elevation certificate. The town is spending real money on seawall repairs and beach renourishment, which is the process of pumping sand back onto the beach after the ocean steals it, which feels a little bit like trying to fill a bathtub with the drain open. Homes here can range anywhere from the high to hundreds for smaller spots to well over $1 million for the nicer stuff. And a lot of buyers still come. Savannah is booming. People want proximity. But the resale math is starting to get weird for certain lots. And some homes are sitting longer than you would expect for a market that hot. Fun Barrier Island fact, they are technically temporary geological features. I am not saying Tybee is going anywhere tomorrow. I'm just saying the ocean has a longer timeline than your 30-year fixed rate. Number 9. Galveston, Texas. Galveston has been getting hammered by the ocean for over a century, and it still refuses to quit, which is either admirable or deeply concerning depending on your risk tolerance. This is a city that was literally destroyed by a hurricane in 1900, in what remains the deadliest natural disaster in American history. So they built a seawall, a big one, and then kept building, and more people came, and now there are a lot of homes and condos on a skinny island in the Gulf of Mexico in a warming ocean. The Gulf is one of the fastest warming bodies of water in the region. Warmer water feeds stronger storms. Galveston knows this better than anyone, and yet the construction has not exactly slowed down. Flood insurance here is not a maybe. It is a must, and it is expensive. Some homeowners are facing annual premiums that genuinely rival car payments or even rent in other cities. The risk rating to .0 update hit Gulf Coast markets hard. Certain properties saw their insurance quotes jump dramatically, sometimes doubling or more. The lifestyle is genuinely fun, by the way. Good food, weird history, great access from Houston. Lots of people use these as weekend places, rather than primary residences, which changes the calculus. If you are not depending on the house as your main financial asset, it hits differently. But if you are buying as an investment expecting appreciation, just know that properties with significant flood exposure in established risk zones are not appreciating the way comparable homes do in less exposed markets. The data on this is increasingly hard to ignore. Galveston is still selling homes. It will continue to sell homes. I am just saying understand what you are buying. Number 8. Ocean City, Maryland. Ocean City, Maryland is the kind of place that exists in a very specific and beloved corner of the Mid-Atlantic brain. Funnel cake, boardwalk, mini-golf. Families who have been coming here every summer since the 70s. It is deeply nostalgic. It is also a narrow barrier island. Are you sensing a pattern with the barrier islands? Ocean City has been spending tens of millions of dollars on beach replenishment programs because the beaches erode. This is a recurring cost, paid largely by taxpayers. The Army Corps of Engineers comes, pumps sand, the ocean does what the ocean does, and the cycle repeats. It is not free, and it is not a permanent solution. Meanwhile, the Back Bay flooding, meaning the side away from the ocean, is increasing. This is a consistent pattern in barrier island communities. People focus on the ocean side because it is dramatic, but the quiet Back Bay flooding is often the more disruptive day-to-day reality. Property prices here have been volatile. The pandemic caused a surge in beach town demand across the board, but some of that surge has softened as insurance costs became clear and as buyers got more educated. A condo in Ocean City can range from the low 100s to several $100,000 depending on location and floor and whether you can see the water or just a parking lot. The irony is that the higher floors flood less, which means the most expensive units are often the safest ones. Real estate working exactly as intended. Number 7. Isle of Palms, South Carolina. Isle of Palms is where Charleston professionals go to feel like they have made it. It is beautiful. The houses are gorgeous. People wear linen here with complete sincerity. It has the kind of vibe that makes you want to spend money you do not have. And spend money you will, because Isle of Palms has real flood exposure and real insurance costs to match. Charleston as a metro is dealing with some of the most severe sunny day flooding on the East Coast. The city itself regularly floods during high tides. Not storms, just regular moon-related tidal activity. Isle of Palms, being even further out on a barrier island, has the full set of risks. Homes here are expensive. Nice waterfront or oceanfront properties can push into the millions without much resistance. And buyers are still absolutely showing up because this is genuinely one of the most beautiful places in the South. Nobody is disputing that. But here is the thing. Properties that sit lower, that have longer flood histories, that require expensive elevation or mitigation work, those are the ones where the comps are starting to tell a quieter story. They are taking longer to sell. They are requiring more price cuts than comparable homes in less exposed locations. Some buyers know this and are pricing it in. Some buyers are not. That gap in information is where a lot of financial pain tends to live. Number 6. Hampton Roads area, Virginia, specifically Matthews County and surrounding low-lying communities. Norfolk gets all the press on this topic because Norfolk is genuinely one of the most flood-threatened urban areas in America and also happens to have a massive Navy base in it, which gives the story a national security angle that reporters love. And fair enough, but I want to zoom out to the rural low-lying communities surrounding this region, because those stories get told less. Matthews County, Virginia is a peninsula surrounded by water. It is quiet. It is old. It is beautiful colonial-era history. And it is experiencing land subsidence combined with sea level rise at a rate that puts it among the most vulnerable spots on the East Coast. Some researchers have called this area one of the fastest sinking coastlines in North America. Property values here are complicated. Homes are cheap by coastal standards, which can look like opportunity. But cheap can also mean nobody else with good information wants to pay more. The cost of flood insurance, the cost of elevation certificates, the cost of potential buyout programs that some communities are pursuing. These change the actual affordability equation significantly. This is not a glamorous market. It is not Instagram, but it is a real place where real generational families have lived for hundreds of years and are now facing a genuinely difficult set of choices about whether staying is financially viable. That deserves more attention than the millionth article about Miami. Number 5. Key West and the Lower Florida Keys. Okay, yes, we are doing the Keys. Of course we are doing the Keys. Key West is at roughly 2 meters above sea level at its highest point. The entire archipelago is essentially a collection of limestone rocks, sitting barely above the Atlantic. And limestone is porous, which means you cannot just build a seawall and call it done. The water comes up through the ground, literally up through the streets. This is called groundwater intrusion, and it is a plumber's nightmare and an urban planner's existential crisis. Key West has been spending genuinely enormous sums on raising roads, upgrading drainage, installing pump systems. The numbers involved in the city's adaptation plans are in the hundreds of millions of dollars for a small island city. Where that money comes from long-term is an interesting question. Property here is staggeringly expensive for a place that has the geology of a particularly stubborn coral formation. Nice homes regularly exceed $1 million, some significantly more. And people still buy, because Key West has cultural value that is hard to quantify. It is weird and wonderful, in a way that is almost impossible to replicate. But flood insurance here is brutal. Some homeowners are paying $15,000 to $20,000 or more annually. Add that to mortgage payments on million-dollar properties and you are looking at carrying costs that make the numbers very difficult to work, even if you assume solid appreciation. Some buyers are doing cash purchases specifically to avoid the federally backed mortgage requirement of flood insurance, which is a financial decision I'm not here to judge, just worth knowing that is happening. Number 4. Annapolis, Maryland. Annapolis is the kind of old money coastal town where the boats are nicer than most people's houses. State capital, Revolutionary War history, serious sailing culture. Very charming in a way that Maryland usually does not get credit for. It is also flooding constantly. The downtown historic district of Annapolis floods during high tides. Routinely, this is well documented, not a secret, and has been happening for decades and is accelerating. The famous city dock area, which is the postcard image of Annapolis, gets submerged during significant tidal events with increasing regularity. The city is working on adaptation plans that involve elevating areas, improving stormwater systems, and rethinking how the waterfront functions. Some of this work is underway. The cost is substantial. For property owners, the picture is complicated. Annapolis has enough demand from the D.C. and Baltimore corridors. that prices have stayed strong broadly, but individual properties in the lower, flood-prone areas are facing scrutiny. Buyers are doing more elevation certificate homework. Insurance costs are real, and some properties in the historic district have limitations on modifications because of preservation rules, which means you cannot easily elevate the house even if you wanted to. Historic preservation meets flood mitigation is a policy collision that most cities are not handling gracefully. Number 3. Charleston, South Carolina proper. Yeah, Charleston gets its own entry separate from its barrier islands, because Charleston proper has its own distinct and well-documented flooding situation. Charleston is built on a peninsula, to rivers on the sides, harbor at the bottom, ocean not far away. It is a geographic position that made it a brilliant trading port in the colonial era. It is a slightly less brilliant position when sea levels are rising. The city experiences tidal flooding on sunny days with increasing frequency. If you look at NOAA's tidal gauge data for Charleston, the trend is clear. Events that were once rare are now routine. Intersections that never flooded 30 years ago are flooding multiple times a year. And yet Charleston is one of the hottest real estate markets in the South. People are moving there from everywhere. The culture, the food, the history, the weather. Most of the year, it is genuinely desirable. Demand is real, so what you get is this tension. Prices going up because demand is strong. Risk going up because physics does not care about demand. And that tension is manageable in the short term and genuinely concerning over a 30-year mortgage horizon. The city has flood adaptation plans. Some are funded, some are aspirational. The cost to truly protect Charleston from long-term flood risk runs into figures that are difficult to wrap your head around. Billions, with a B, for a mid-sized coastal city that has real budget constraints. I am not saying do not go to Charleston. Charleston is extraordinary. I am saying understand the timeline you are buying into. Number 2. Miami Beach, Florida. Miami Beach is the one that gets the most coverage, and honestly it earns it. This is a city that is literally pumping water out of its streets constantly. The pump infrastructure is extensive, and it is expensive, and it is ongoing. And it was not cheap to build, and it will not be cheap to maintain. And the pumps work, somewhat, in the current situation. What happens as sea levels continue to rise, and the pumps need to work harder, and the events become more frequent is a question that the city's own engineers are actively wrestling with. Miami Beach also has the limestone groundwater intrusion problem similar to the Keys. You cannot seal it from the bottom. The water has options. And yet, the prices. My goodness, the prices. Miami Beach luxury real estate has stayed absurdly expensive. Penthouses going for tens of millions. Wealthy buyers from around the world treating it like a global asset class rather than a local housing market. And some researchers have specifically called out the disconnect between flood risk and pricing as a market anomaly. There's an argument that wealthy buyers are effectively betting that money and political will can keep Miami Beach protected indefinitely, and that if things get really bad, they can sell to the next buyer and move. That is a real dynamic. It is not crazy as a short-term calculation. It does raise interesting questions about who ends up holding these assets at the moment the math stops working for everyone. The middle of the market, the regular condos, the less flashy buildings. Those are showing more stress. Some buildings have high insurance costs, high HOA fees. That include flood mitigation costs, deferred maintenance, and aging infrastructure. The math there is harder. Miami Beach will not sink overnight, but the financial structure around it is already shifting. Number 1. Norfolk, Virginia. And we end where the data basically points to every single time. Norfolk is a city of about 250,000 people. It has the largest naval station in the world, and by various measures it is one of the most flood-threatened cities in America. The combination of sea level rise and land subsidence here is severe. Parts of Norfolk have already flooded out. Homes have been purchased by the city through buyout programs, specifically because they were in locations too dangerous to continue occupying. Whole neighborhoods are being slowly unwound. This is not hypothetical. This is not a projection for 2150. This is happening now. People are receiving buyout offers. Some are taking them, some are not. Some cannot afford to leave and cannot afford to stay. The economic geography of flood risk in Norfolk is not random. Lower-income neighborhoods often sit at lower elevations. The burden of adaptation and potential displacement falls unevenly. This is a pattern that repeats itself in flood-vulnerable cities across the country. Property values in certain parts of Norfolk have essentially stagnated or declined, while comparable inland areas have appreciated. Insurance costs are significant. Some properties cannot get private insurance at all and rely entirely on the National Flood Insurance Program, which has its own funding challenges as a program. Norfolk's situation is the furthest along in terms of what the next few decades could look like for coastal communities. That cannot outspend the water. It is a preview, and it deserves to be taken seriously not just as a military logistics problem, but as a human housing problem. So here's where I land on all of this. None of these places are going to vanish tomorrow. Some of them will fight very hard and spend a lot of money, and do impressive engineering and maybe buy themselves several more decades of viability. Some will adapt in ways we cannot fully predict. Humans are creative when the situation demands it, but the financial reality underneath all of this is changing. Insurance markets are pricing risks that real estate markets have not fully absorbed yet. That gap is closing, slowly, then probably faster. And the people who get caught in the transition period, the ones who bought at peak price, with optimistic assumptions about future costs and sellability, those are the people who face the hardest math. Buying a beach house is an emotional decision. I understand. The ocean does something to people's brains. I am not immune to it. Standing in front of the water with your feet in the sand is one of the genuinely good things humans get to do. I am just saying, know what you are buying. Read the flood map. Get the elevation certificate. Ask what the insurance actually costs. Not what it used to cost, what it costs right now in 2024, and what the trajectory looks like. Talk to people who live there year-round, not just vacation renters. And if you are already in one of these places, I'm not telling you to panic. I am suggesting you pay attention to what your city is planning, what your insurance market is doing, and how your neighborhood's sales comps are trending. That information is out there. The ocean is patient. It has been around for a very long time. It will still be around regardless of what we build. The real question I keep coming back to is this. At what point does flood insurance become so expensive that the American dream of coastal homeownership becomes effectively only available to people wealthy enough not to need a mortgage? And if that happens, what does that mean for hundreds of communities built around the idea that the beach belonged to everyone? Drop your answer in the comments, or argue with me about which town I got wrong. That is fine too. Half the reason to make a list like this is to watch people defend their city, and the replies with the energy of someone who has personally invested in said city, which, statistically, some of you have. Take care, stay dry, and maybe check your FEMA flood map before you fall in love with that listing.